All right, guys, welcome to another live stream. Welcome to another live stream. Today we'll be going over the markets as usual, and then I have an article talking about Social Security and Medicare. So we'll go over that pretty soon. But it looks like if I share my screen, it looks like the overall markets are up, right? So the S&P is up, the Dow's up, Nasdaq is up, Russell is up, crude oil is up, and then gold is up. So everything is up. Last week we had I think it was just like back and forth. I think we saw, little dips here and there, but it wasn't like too up. It wasn't too down. So yeah, and I think, this is kind of, I would say, a rebound week from what we heard from the Fed in their last recent meeting. And if you guys remember what they said in their last recent meeting is that I mean, they sounded pretty dovish, right? Jerome Powell sounded pretty dovish, meaning, it sounds like they're going to be cutting interest rates soon. I was just listening to a podcast earlier, and somebody was saying they were getting like 5% on their savings account, but they just recently decreased it to like 4.25. So it's just signals that, people are preparing for these interest rate cuts. When interest rates get cut, they basically, like banks, they start cutting what they start offering, to you, the customer, right? Because the way they make money is, they take your money and they put it in something pretty safe like U.S. bonds and things like that. They get that return. They make a small little spread on that and then give you, your cut. But, the fact that they're cutting savings rates so soon suggests that, interest rate cuts are coming soon. Because I'm pretty sure they have insight. I'm pretty sure they're on the inside. They have, people that let them know, hey, we're going to be, it looks like they're going to be cutting rates soon. Or they could just have been through this cycle multiple times. So when they hear Jerome Powell speak, they're like, okay, this guy's ready to cut rates. All right, so the S&P is up, Dow's up, Nasdaq up. Like I said, everything across the board is up. Russell's up, crude oil is up, gold is up. I need to take that off. And yeah, everything is pretty much up. So let's see. Let's look at some stocks pretty quick. Let's look at the AI sector. I think Nvidia was up too. Yeah, Nvidia's up. Nvidia's up 3.77%. It was in the 800s last week, and now it's at 921. And everybody's predicting that it's going to break 1,000 by the end of the year, and I think that's the case as well. Right? It's most likely it'll go past 1,000 because 1,000 is like a psychological number for traders. So it's never just going to stop at 1,000. So most likely we'll probably be at like 11 to 1,500 Nvidia price by the end of the year. All right. Let's see. TSM, another one is up. It looks like all the AI plays are up. Let's look at Tesla. Tesla's up as well. ASML. ASML's up as well. Yeah, this is doing pretty good. All right, so let's take a look at crypto. All right, crypto is up. It bounced back. If we look at Bitcoin's chart, last week we were at 50. We're in the low. I think the lowest we got last week was 50. Let's see. 7-day chart. 57. So a nice little bounce back here. 7K or 6 to 7K bounce back to 63. The highest we got up today was 65. So yeah, a lot of people are saying, going into the summer, we might hit that 100K mark. And if we do that, other coins are going to follow suit, right? Bitcoin leads the way, and then every other coin follows suit. And then you might have sectors that just outperform BTC altogether, right? Like those strong narratives that we talked about, AI, real world assets, Bitcoin layer twos, Ethereum layer twos, and all that good stuff, right? Yeah. So the chart, a little correction here. So we'll see what happens. It's going to get pretty interesting going into the summer. And then if we take a look at the top gainers, WorldCoin, Solana, Dogwif, Injective. So yeah, some coins are performing better than others. All right, so here's the article that I wanted to talk about, or I saw, thought I'd share. So Medicare and Social Security go broke. Dates are pushed back in a measure of good news. The go broke dates for Medicare and Social Security have pushed back as an improving economy has contributed to change projected depletion dates, according to the annual Social Security and Medicare trustees report Monday. Yeah, so I think people have heard this before. Basically, Social Security, people are always saying, "Oh, once you get to the age to collect Social Security, there's not going to be much of anything left for you," right? So they're basically saying here, with an improving economy, those dates are going to get pushed back, and that's pretty good to hear, right? Obviously, for people that are going to be retiring maybe later on. Obviously, the people that are retiring now, they're good. This is more for people probably like 30, maybe when I retire. But again, I always talk about not depending on Social Security. It's good that you get to collect the check, but it wouldn't be something that I depend on to fuel or support my retirement. At retirement. All right, so it says still officials warn that policy changes are needed lest the programs become unable to pay full benefits to retiring Americans. Unable to pay. Okay, so they're saying that policy changes are needed to lest the programs become unable to pay. Okay, so basically they're saying policy changes may be needed if they can't pay Americans. It says Medicare's go broke date for its hospital insurance trust was pushed back 5 years to 2036. So initially, I guess it was 2031. That's pretty close by, right? That's what, six? That was initially 7 years. So now it's an additional 5, so 12 years from now. Thanks in part to higher payroll tax income and lower than projected expenses from last year. So they're taxing people more on their payroll, and then expenses got lower. Medicare is the federal government's health insurance program that covers people age 65 and older, and those with severe disabilities or illness. It covered more than 66 million people last year, with most being 65 and older. Once the funds reserve become depleted, Medicare will be able to cover only 89% of costs for patients' hospital visits. Okay, so when the funds are gone, Medicare would be only able to cover 89%. It's still a pretty good percentage, but medical costs are very expensive. So paying that additional that 11% coming out of the patient's pocket will definitely not be easy to cover, especially if you're a person that didn't save or doesn't have a nice retirement fund, or you don't have money coming in. Patient hospital visits, hospice care, nursing home stays, home health care that follow hospital visits. Meanwhile, Social Security trust funds, which cover old age and disability recipients, will be unable to pay full benefits beginning 2035 instead of last year's estimates of 2034. Okay, so that one got pushed a year back, and it's saying, next sentence is, Social Security will only be able to pay 83% of benefits. All right. So it looks like be able to cover more of Medicare. And the reason, my theory on this, is because Social Security is cash, right? It's actual money that gets sent out. Whereas, Medicare it's 89%. It's an additional 6%, and it's probably because a lot of those costs can probably be thrown just thrown out. A lot of people go to the doctor and they get stuff written off because you come out of the ER or you go to the hospital and the bill's like $5,000 to $10,000. So some of that stuff is it really worth 5 to 10,000? Probably not. So that's why I think Medicare will cover more in expenses and more in medical expenses opposed to when Social Security runs out, the 83%, because you're actually giving out physical cash. There's nothing that you could really substitute to supplement that, right? When you got to give people actual money. Social Security admission, Commissioner Martin O'Malley called the report a measure of good news, but told the Associated Press that Congress still needs to act in order to avoid what is now forecast to be an absence of their action. 17% cut to people's Social Security benefits. Yep. That's a big cut, right? Especially if you've been paying for 30 years, it will suck to get to that point and then you get a 17% cut, which would not be good. So yeah, I think, hold on, let me move. Yeah, so I think, don't depend on Social Security, don't depend on Medicare. Make sure you have some streams of income once you go into retirement. Now, they were talking about age 65 and age 66. I'm pretty sure you've heard it from me. I do not want to retire at that age, or at least be waiting for some type of paycheck to cover my lifestyle, right? I want that to be additional to the streams of income I've built up until that point, and it's just a plus to have the Social Security check and the Medicare, right? I'm just kind of like planning to pay for everything out of my own pocket, and then whatever I get extra, if I get Social Security or if I don't get Medicare, it's a plus. Or if I don't get it, it's whatever. But if I do get it, it's a plus. But yeah. But I think so that's for it for the article. Now for the markets, we're in May. I think we are going to we're coming upon another crypto rally. Remember, we are past the halving, so this is the time where prices go crazy. And again, it's all about narratives. Which narratives are going to play out first? Which coins are going to go up first? And then it trickles of event, and then usually all the other coins start to go up. With everything else, right? They may not do as good as the ones that had a specific narrative, because if you remember in the previous bull run, it was NFTs, it was DeFi. It was like the meme coins. I don't know if I said meme coins, but yeah, those three things. Oh, metaverse, right? Metaverse, all that type of stuff. So hopefully you are in one of those narratives that are going to take off, and your portfolio is going to see a good increase, right? But yeah, that's pretty much it. I'll see you guys Wednesday, and hope you guys have a good one. Take care.